It's March 8, 2025, and with all the global uncertainties regarding economy and politics, I thought it would be the best for us to hear from one of the experts in the field, Chris Slightham, to walk us through what has happened in the market and what we are expecting to see in 2025. Let's go to the room and hear from Chris.
Chris is a third generation real estate, and him and his brother are running this organization, and has a tremendous knowledge and hands-on information on real estate, because not only he is a CEO and president of this company, he has his own investments in real estate, and he can share with us all of his insights. I'm really thankful, Chris, for your presence. Let's give it to Chris. Thank you so much.
Thanks, Ed. Thank you.
Thanks for your time.
Thanks for the kind words. A pleasure being here. I love talking about real estate. It's all our family has done here in Canada since my great-grandfather arrived in the early 1900s, I guess, as a bricklayer, and we've done nothing but real estate-related businesses since then. And so it's something that we're super excited about. We've been very lucky to have benefited from the industry and from real estate over the years. And as Ed has said, we invest in real estate, we've built real estate, we've traded real estate, we lend in real estate, so we know a lot about real estate. What I've found over the years and what my family has found over the years is the real key is education. And the more you know about the facts that are really going on in the industry and around the world and locally here, just the better decision you can make. And so that's really all we try to do, is just provide a whole bunch of, very fact-based information. You're going to see a few charts here. I love charts and numbers, and it's all, we don't make it up. This is the real math, the real numbers that the market, in a market our size, you can believe the numbers because they tell a real story. And from that, we make great decisions. And we've made great decisions over the years because we've been careful and patient and not highly leveraged and cautious. That's just the approach. We probably could have been bigger if we had have taken more risk, but the good news is we're here to talk about it. And through the ups and downs, we've gone through many cycles over the years. And we know that over the long run, patience is profitable in real estate, and it's a pretty exciting opportunity, and anybody can participate. But the key is knowing when and how and what to keep your eye open for. So hopefully in the next few minutes, I can share some ideas and give you some insight, and whether you're looking to buy, sell, hold, invest, hopefully it's of value to you today. We look at seven key factors that drive real estate over the years. This is decades of studying what's gone on, using research from many different sources, as well as our own experiences as well. The seven factors that we see that generally drive values are cost of ownership, which is, of course, mortgage value. It can be mortgage, can be construction costs. Job security, population growth, supply, regulatory changes, and environment, global factors. We have a big one just south of the border now. You might have seen some headlines. Replacement value and versus market value. So today I'm really just going to focus on the four that seem to be driving today's value and reality of our market more. Cost of ownership, the big thing I'll talk about is interest rates. Population growth, it's the demand side of the curve and of the ledger, and it's obviously in the GTA. The GTA's had the fastest population growth in the last decade than it's ever experienced, and it continues to experience it now. But there's some factors that you'll have to keep in mind as we go forward. Regulatory changes, things like the increase in the CMHC's high ratio limit from $1 million to $1.5 million, so people can now go above the $1 million purchase mark, and that's going to change a little bit of dynamic in the marketplace. And then global factors, of course, that includes our new leadership, our new friend, old friend, new friend, I don't know how you want to put it, Mr. Trump, President Trump, just south of the border, causing some stir, we'll call it at the very least. I don't like to glorify it by calling it a trade war. I'd say there's a trade negotiation going on. Trade war is something that the newspapers use as to sell newspapers and news and get everybody excited over nothing. But ultimately, we'll get there at the end of the day. But that's a factor that you do want to keep in mind, at least in the short term. We're going to talk about short-term and long-term factors, of course, because a lot of it is really short-term stuff that causes people to hit the brakes, and that's what's happening right now. Some interesting data points. In the last 20 years, our population has gone up 1.26 million people in 20 years. So we're and growing, and that's just in the GTA. You can see though in 2024 we actually only had 67,000 transactions in the Greater Toronto area, which is almost 16,000 fewer than we did 20 years ago, with 1.25 million fewer people. So that indicates to us that the market is not performing at its normal levels. That's all that tells us. Nothing to be dramatic about. It's just there's less transaction volume. It's not that real estate's bad or housing's gone, nobody wants houses anymore. It's just that we're going through an uncertain time. And we know for certain is that when you have this many people, you cannot have a market that only does 67,000 transactions on an annual basis. So then we start to look into reasons why that's happened, helps us better understand where values are today and whether today might be a good time to buy or a good time to sell, or both. But these are some of the key things that we'd like to uncover and study, not just the headline grabbing trade war news that goes on and grabs our attention on a daily basis right now. Since 1980, the markets look like this. Might be like your heart rate after your first espresso in the morning. It's never in a straight line. It goes up and down. But what all this mess tells you is that this dotted line in here, that you might be able to see, 6.73% is the average annual price appreciation over that 44-year period. All that noise, all that up and down, all that mess we made in the late 80s, and the recovery in the 90s, which I've circled there. Took 7 years before things started to recover because there were so many years where we had abnormal price appreciation. So if you heard headlines recently or when the rates start to go up, so we're going to have a 90s style real estate correction. That was the big initial headline fear. That's what they were talking about. 7 years of negative growth. It was a mess because we had 4 or 5 years where we had double-digit price appreciation, which is unsustainable. But what the press didn't understand is when things like that happen in the world, we learn from it. Just like what happened in COVID, right? We had a devastating market here in COVID, and we learned how to survive. Next time there's a global pandemic, we'll handle it better. It's not like we're stuck in the old days and we're going to make the same mistakes we did this time. We're going to make better decisions. And that's why when things get out of whack here off of the norm, Bank of Canada steps in, government steps in, they make some decisions that hopefully, because nobody wants their citizens to end up in a 7-year disaster, financial disaster. That's not anybody's goal. But we've done it, we've learned from it, we've moved along. This is the global financial crisis. We didn't even really retract. There's not even a negative on the screen because our country reacted quickly, our banking system was better, lots of things are in our favor. Here we got a little bit ahead of ourselves in 2015, 2016, and so they brought in what they called the 16-point fair housing plan. I don't know if you remember that at all, where they started taxing foreign buyers a little higher, try and normalize things. There's a bunch of stuff they brought in, and then they brought in the January 1st, 2018, the mortgage stress test. So every mortgage today, anybody that's taken a mortgage, they qualified at 5.25% to get that mortgage. So one of the key reasons why we're not in a 90s style recession is because they were thoughtful. They were like, mortgage rates even back here at 3% or 2.75 or 3.25, like that seems really low, because it is low. Mortgages have been 7% for decade after decade after decade. 5, 6, 7. We're at 3% at that stage. So why don't we do this? Let's put in a stress test so that, if someday rates should get higher, which they felt they would, we've kind of protected ourselves a little bit and missed a big plummet, which is what happened. And that's why we have quick recoveries. So Here, 2020, of course, we now know COVID arrived, and they had to do something to keep the lights on and to calm the world down. And so they did things to drop interest rates. They changed monetary policy, so interest rates went to zero. The effective rate was zero. Actually, it was negative. We actually technically had, relative to inflation, we had negative interest rates. So of course, what did we all do? We went and bought stuff, right? Did anybody buy a boat, a car, or two? Went on a nice trip? Your house value went up, you felt wealthy for a minute, right? So you bought a new watch. Anybody do that? Yeah. Right? I see somebody smiling in the back. Yeah, guilty as charged. That's okay. We're human. We're allowed to do that stuff, right? Normal. We all did it. But some of us got a little carried away. The market got carried away. And what happened is people started buying everything they could get their hands on. Not maybe thinking that, hey, interest rates might go up some point in the future. Unfortunately, the government and the Bank of Canada, again, we don't always get things right. Global banks around the world, they kept rates too low for too long. And that's when you get a spike. When inflation started to tick up really quickly, so that 8% inflation, which is unheard of in our part of the world, not unheard of in other parts, but in our part of the world, it's unheard of, kicked up. So they had to slam the brakes on, literally slam the brakes on. And between March of 2022 and July of 2022, they changed the whole world. And in real estate terms, that's like instantaneous, because real estate's not normally an instant. It's a slow moving asset. It's not like a stock where you can trade it by the minute. But we had to slam on the brakes. And this is our result. We had a little bit of a contraction. 2024 stabilized. And 2025, we're probably going to end up somewhere in here. So we're not going to have a 90s correction. We've already corrected, and we're already growing. It's not obvious that we're growing, and I'm going to show you why in some of the stats. And if you read the headlines this week, February wasn't exactly a glamorous month for transaction volume. Values are staying the same, but transaction volume was down 28% year over year. Significant. 1 in 3 trades didn't happen. It's not a good sign for the present day economy, but we'll touch on why that's the case for now and what you can probably look forward to seeing in the next months to come. This is a bunch of dots that actually are quite meaningful. It's hard to see maybe from the back, but I'm sure Ed will circulate or send you these charts afterwards if you'd like to have a copy of them. But these blue dots here, which you can barely see, I'm sure, that's the interest rate. That's the overnight Bank of Canada overnight rate. The red dots is the average sale price for real estate since November of 2020. November of 2020. So November of 2020, I don't know if you remember that far back or if you even want to remember that far back in some cases, was the month that they announced that they'd found a vaccine, a solution to COVID. So all of a sudden, the world took a big deep breath and relaxed. It's okay. We're going to make it. We're going to figure this out. Fastest time in history to a vaccine solution for a major global pandemic. Never happened that quick before. And then what happened? Interest rates had already been dropped to zero since June of 2020. But you can see what happens to the red dots fairly quickly after November of 2020. They start going up. Because everybody took a deep breath and said, okay, we're going to live. My job seems to be fairly secure, unless I was in the food and beverage industry, but that's a whole other discussion. But most of the world felt that they could pay their bills. They had job security. They felt comfort. The government had done the best they could. Free money all over the place, throwing it everywhere. We were all going to continue on. They had the global pandemic under control and life was going to be okay. And then, of course, things started to take off. Unfortunately, they left it at zero for 12, 14, 18 months, which is probably about 6 or 7 months too long. And if you look at this part here, It's hard to really tell, but except for this is very, very obvious. So just to put it into context, this is December of 2021 when they started talking about maybe raising rates. Maybe they sort of hinted that they're going to start raising rates. Between December and February, values went up $150,000 in 60 days. Absolutely unsustainable. Not going to happen. Not good. That's when inflation, they finally realized that, oh my gosh, we've got a problem. If they had have asked us back here, we could have told them it was time, because inventory was less than a month of standing inventory. People were paying heavily for real estate at that moment in time. There was 17 offers on every listing we had. There was way more demand than supply. Things were out of balance. My phone didn't ring from the Bank of Canada, so they didn't get the right answers. So the rest of us had to suffer. They realized here that, oh, we got a bit of a problem. And then you can see what happened. You can see the alignment here. March was the first increase. This was February. You can see the peak. March was the first rate increase, and then boom, these are the rates. Look at how quickly they moved. What you will notice too is by July, they had done 1, 2, 3, 4 increases, huge moves from basically 0 to 250. So they basically moved at 2.5%, which is a lot when you're coming from 0. And it drove prices to basically where we are today. Real estate bounces around a little bit along the way. Oh gosh, I paid way overpaid here. No, you didn't. Don't worry about it. It's just seasonal. Just a little bit more action in this moment. What happened here, though, in early of 23, there was a mini banking crisis again, and interest rates actually dropped suddenly for a minute. And the economy was still pretty strong. So that did cause prices to pump up a little bit more than they probably should have. And then they made 2 more moves there just to put the final nail in the coffin, as they say. We were going to err on the side of recession versus inflation. And of course, it calmed things down, but you can see this line, if you follow the line right in here, which is about the middle of all these red dots and where we are today, it just kind of settled the prices into where their natural value should be. Here, they started to realize that they probably kept them too high for too long, and they needed to start to make things move. And they started moving rates and nothing happened. Until this past fall in October, November, people finally came off the sidelines for about 60 days and said, okay, things are looking good. Rates are coming down. Rates peaked. I'm going to show you in a minute, peaked at just over 6%. Now they're at 4%. It's a huge, huge delta. Great purchasing power. It's come back in. Then November hit, and what happened? Thank you. Thanks for playing along. We had an election in the United States of America. President Trump, reelected. And what did he say? When I am in power on the 20th of January, I'm going to make a lot of changes. He even said, I'm going to act like a dictator for one day. That's his quote. And he made over 100 executive orders in the first day. One of them was he was going to empower his folks to look at all trade relationships around the world. And he was going to put 25% tariffs on his favorite trading partners so they'd smarten up, because he felt that they are being mistreated. And of course, what has it done since then? Even though we have low rates, our economy was in okay shape. It's created a massive amount of uncertainty. He finally comes into power on the 20th of January, and he does what Trump does in his glorious style. He grabs headlines on a daily basis for a vast number of reasons. Whether it's a war in Ukraine, whether it's trade, whether it's his own borders, whether it's fentanyl, whatever he feels is important, he wants a headline. And he's a tough negotiator because he's a real estate guy. Right? That's what he is. He's a real estate guy. Born and raised, just like me. I'm a lot politer than he is. Whether you like him or don't like him, I don't love the way he communicates. There's a lot of things that he's not a very nice person. But ultimately, he's a negotiator. And that's what he's doing right now. He's establishing his position in the world. I was in New York at a conference last month, and there's an author, I forget his name right now, has written 3 books on Trump. And he had an opportunity to interview President Trump on the first run for president. And he said, well, why the heck do you want to be president? Like, why do you want the aggravation? He said he didn't pause for a second. He said his answer was, I want to be the most famous person in the world. That's why. Didn't even pause. So I want headlines, is what that translates to, right? I want people to study me. I want your great-great-great-great-grandchildren to, in the history books, to know who Donald Trump was, right? And I have ideas that I want to impart upon the world, right? And that's what he's doing. So are we in a temporary storm? Yes, absolutely. Is it going to cause consumers, like all of us here in this room, to question if we should really go out and buy something today? Like, really? Like, maybe we should wait. Anybody here in the auto sector or any sector that might be affected by tariffs? Likely, you're thinking, I might want to wait and see how it does directly affect our industries before I make any major decisions, right? That's just human nature. It's a good, normal self-preservation mode. And that's what we're in right now in our marketplace. But therein lies the opportunity, I think, because I know ultimately, regardless of whether you like him or despise him or he does good things or bad things, we will end up in a better place as a country. Because we will have to make changes. We will have to adapt. Canada is a great place. Or we wouldn't be here, right? Because we all are free people to go anywhere we want in the world, and we choose to be here, right? It's a great place. There's reasons for it. And that's why the long-term story for real estate has been so good here and will continue to be. But we have to get through the noise. And if we can see through the noise, like a guy like Warren Buffett has done his whole career to create one of the greatest investment stories the world has ever seen, by doing exactly that. He buys when people are selling and sells when people are buying. And he sees through the noise for what it really is. It's not easy, but that's what's going on today. It's a noisy moment, and in the noisy moments, I think, are the best opportunities. This just gives you a quick picture. Last April, we were doing this together. We were sitting in this room, and I don't know if some of you were here last April or not, but this is what was going on. Last April, interest rates were 5.6%. Average home prices in April, and they'll likely be back over that this April because April's generally higher than February just naturally. 1.1 million. Down payment was $221,000. Land transfer tax, $37,000. Monthly payment for that mortgage of that home that we're trading, that level, $5,400 with 20% down. Today, this is the average sale price we just took for this month. This is actually very conservative. I'm just talking to George from DLC Edge Financial, and you can get a 4% mortgage right now if you want, but we'll call it 4.25 just to be, conservative. Down payment now $10,000 less roughly, a little bit savings on the land transfer tax. Your monthly costs for the same average sale price, roughly, I call that roughly the same. It's 40 grand at $1 million, it's nothing. Look at that. We're saving $900 a month. So we have more purchasing power today, but prices haven't moved. And whenever you're in that scenario, that's a little sneaky opportunity, as I like to call them, where market value is actually improved dramatically in the last 12 months, even though prices haven't moved, because your purchasing power has changed. So actually, the true cost of real estate has gone down in 12 months, even though the sale price is pretty much at where it's at. So there's actually Significant savings there. But unless you stop to study it, and that's why I like educating people. I know numbers are really boring. I joke with our whole team here that, when the stats come out, I'm up early and I'm looking through the numbers and isn't that exciting? Oh, yeah, no, it's not exciting, Chris. Numbers are not fun. But they tell you a story and they tell you the truth about what's really going on out there. Not the gut feeling, not your friend at work who said, oh, never buy real estate. I just lost a fortune on a condo I bought pre-construction. Well, because you were gambling, you weren't investing in real estate. But when you dig into the math and you see what's really going on, you actually get a sense of really what kind of opportunity we have in this moment. Because with rates the way they are today, it's my feeling that if we didn't have the uncertainty of President Trump rattling all his threats, prices would be higher. Because incomes have not dropped in the last 12 months. They haven't. Our economy, take Trump and the tariff threats away, was fairly stable. It's actually pretty good, right? So in that type of environment without uncertainty, people go out and they spend money. When we've gone through a couple of years of low transaction volume, there's a ton of people in the GTA and across the country that need homes. They're just waiting to feel good about making that decision. So that's likely what's going to happen once we get through the noise of our headline-grabbing friend south of the border. We always look back to try and determine where are we today. And this chart, you can see this is 2018. We all wish we bought some more real estate in 2018. The average sale price was just under $800,000. You can see we had a little bit of a bump there when rates were too low. It doesn't even look that serious in this description. What's really interesting is that if you actually draw a straight line across here, we're right about where we should be in today's values. And this chart shows us that. Again, I like history. I like to look back and I like to see, gosh, I should have bought a lot of real estate in 2004. Can you imagine the average sale price in 2004, 20 years ago, was $310,000 for the average home? And today it's 1.1 million. This is today's average, 1.1 million, right? That's just that 6.5% price appreciation compounding over that. It's not crazy. It's not like we had 12% increase every year. On average, since that time period, 6.87%. That's where it would be. We're actually behind schedule on growth, which tells me that our real estate is really well valued at this price today. Because at 6.87%, if you bought in 2004, it should be 1.251 right now. It's only 1.1, right? So it's a little behind schedule because we've pulled back. We're in a bit of a dip. 2009, does anybody remember the global financial crisis in 2009? That's why it's the best performing return of these time periods that I just chose. I just chose them last year because it was, you'll notice it's 20, 15, 10, and 5 years back. Just so it happened to land on 2009, which I happen to know was a great time to buy real estate because we had come off a little bit of a dip, right? If I go back, just to show you this chart for a second, there's 2009, 2008, 2009, right here. There's a dip. So if you bought the dip, you did a little bit better. Not crazy better, but you did better. It shows. You bought 2014, prices haven't quite kept up at the traditional rate. And if you bought 2019, same thing. It hasn't quite kept up with the traditional rate because we're in a dip. We're actually behind schedule now. We got way ahead of schedule in our growth. Average sale price peaked at 1.33 million in February 2022. Now we had to reset the world with artificially too high rates. And so now we're behind schedule. So that means there's a lot of growth opportunity allowed back in here. And that is another indication to me why I don't believe values are going to go much lower than they are. I don't think they're going to go any lower than they are really. Unless, of course, there is a crisis that we can't see. A major war, another global pandemic out of the blue happens. I don't know. Trump goes off his rocker completely. look, if you live your life worrying about those types of events, then nothing I can help you with. But if you think reasonably that we're going to have a reasonable existence over time, it's a pretty good moment. So this is the overall resale market. I'm just going to shift to new construction because it's a big story right now in our marketplace. So new construction has gone. Has anybody invested in new condos over the past years? Bought new condos at all? No pre-construction buyers. Okay, so this might be boring for you, or it might be interesting. But all those new buildings that get built, they get sold in advance. Because in the 90s, part of the reason why it took 7 years to recover is fascinating to know this. The banks used to give the builders all the money to build these buildings before they sold the units. That's how certain they were that real estate would never go down. Only went down for 7 years after that, but that's another story. But they would build and without a sale. So of course the banks got wiped out, everybody got wiped out in the 90s. They said, okay, well, we're not going to give you the money until you've proven that people want your product. So now we have this pre-construction sale process, right? So you go and you buy a condo today. I'm going to put my deposit down, and 5 or 6 years from now, I get delivered my unit, right? So we had a really exciting run of almost 20 years because prices were going up. You probably heard stories about friends or family or colleagues or whatever. They put a deposit down of $100,000. They actually sold the unit before they took delivery, and they made 100 on their 100. That's not investing, that's gambling, but that's a whole other lesson. But that's what the world was like. So a lot of that was happening back here, and all these units were selling. On average, the last 10 years sold about 20,000 units. 2024, only 4,500 units were sold. What's happening here? New apartment completions. This is the deliveries now of all the stuff that was sold back here, because it takes 5 or 6 years to build, are now being delivered here. So we've got a bit of a flood of condos that are about to be delivered. You're going to see a lot of new deliveries, a lot of towers coming due where people are going to start moving into them this year. About 30,000 units are planned to be delivered this year in a market that isn't actually on fire right now, as we know. So we've got a condo glut. So you probably read in the newspaper or hear headlines, or you might have friends now that are crying the blues about their terrible investment. Oh, never buy real estate, it's a terrible investment because I bought a condo and I've lost money. That's why. But when we get up here to 2028, because we're not selling anything now, and this year we're not selling anything in 2025 yet. There's been no new launches yet this year, so 0 sales. Takes 3, 4, 5 years to build it. So you look ahead 3, 4, 5 years, so 2028, 2029, 2030, there'll be 0 deliveries. And there's no way to change that. 0 sales equals 0 deliveries in the future. Impossible to change because you can't build a condo in 24 months. So if the need arises in 2020, 2030, which there will be for new units, it's not like in 2028 they can say, okay, we need buildings, we need units for 2030, let's start building. It doesn't happen that way. It's not the way the world works. It's a 5-year process, sometimes 6, especially for the super tall stuff, anything over 40 stories, 40 to 60 stories. It takes about 7 years to build those. So you're going to literally have a moment in time where there's going to be nothing. Nothing. So all of a sudden, condos value is going to go up. Everybody remember that supply and demand in Economics 101? So right now, values are going down because cost of ownership has gone up. So there's great opportunity in the new construction side. All these numbers, I won't bore you with them. I'm just going to show you December of 20. This is the resale condo market, December of 21, December of 22. So December of 21 was just about the peak, because remember, February of 23 is the peak. You can see that, where values went up. By the end of 2022, when rates took off, values were almost back to where they were, but they went from here to 800,000 back to 700,000 in a 12-month period. And today they're sitting exactly where they're just a little bit less than their peak moment in 2021. So they've just held. If you're interested in condos, Ed can take you through that in more detail. The last thing I'll just leave you with is this idea that my father taught me many years ago, and why we believe real estate's a pretty cool investment opportunity. The yellow line is 0% appreciation. So if you bought a condo or an investment property today for $500,000, you put $400,000, put $100,000 down, you have a $400,000 mortgage. Over 25 years, you just pay it down on a 25-year AM. Slow but steady, just typical pay as you go. You can actually speed up the payments, but just normal. Let's just say we normally do it. So in 25 years from now, you put a $100,000 investment in. If there's zero appreciation, which has never happened in the history of real estate in Canada, you've got $500,000 there. So it's basically a forced savings plan. You imply 3% annual price appreciation over the next 25 years. That $100,000, not only is the mortgage paid off, so now you have zero debt, the value is now $1,046,000. Just compounding at 3%. Remember I shared it's gone up at 6.5. This number here is not even 6.5, this is 5%. Remember, I invested $100,000. I now have $1,007,000. That's the excitement about real estate. Now it's 25 years. It's slow, it's quiet. Nobody even knows it's happening. Right? Like, we get the benefit of helping so many people of different ages and stages in their life. What I find most fascinating is sitting down with folks that have lived in their home for 50 years. You know, they bought it over off the Danforth, paid $17,000 for it. Right? 800 square foot bungalow, bought it pretty much brand new, moved in, raised 3 kids, took care of the grandkids, had barbecues every summer in the backyard. There's a lot of money, 17 grand when they bought it. Probably worked 2 jobs at the time to make sure they could pay for it, right? And now they're selling it for $1.4 million. Same bungalow. They paid for it 40 years ago. And they're millionaires. But you ask them, when you bought this bungalow 50, 60 years ago, did you ever think it was going to be $1 million? You'd be a millionaire because of it. Oh, are you kidding me? Never. We just needed a roof. We just needed a place to raise our family. We did what we could. We scraped everything we could. I worked late. My wife worked late. You hear these stories all the time. The kids contributed, but we got it done. We paid that mortgage in 10 years because we didn't like debt. That was bad. And here I am, a millionaire. That's the story. The same story today. Now, they had the benefit of 7% price appreciation over time, which would take that 500, which I don't even like to put it here because it's going to be well over $2 million. It's hard to even imagine, right? Be well over $2 million bucks. It can't even comprehend that a $500,000 condo here at the Shops at Don Mills 25 years from now is going to be $1.7 million. Even though I know it, even though I've witnessed it, I have trouble believing it myself. And I'm in the business. But that's just simple math. So it's so important to dig in to understand this and make your own decision at the end of the day, what works best for you. But when it comes down to real estate, that's why I love this business. I love owning it. I love helping people make good decisions for themselves, what works for them. Because we've seen this decade after decade after decade after decade after decade. And a lot of it has to do with the luck For me, it's just luck. I was born and raised here. It's just pure fluke, right? Pure luck. In a country that is pretty stable, has a stable banking system, pretty decent healthcare. Toronto General Hospital, I don't know if you just saw that, just got ranked the number 3 hospital in the world. Number 3 in the world. Decent education, safe. And people want to come and live here, which is growth. We have not gotten everything right. That's for certain. We could have done a lot of things better. We can do a lot of things better now. A lot of things better. But overall, we're in a pretty good spot. And that's why this story continues. If you believe that people will stop coming to Canada for some reason, if you believe our population will shrink, if you believe that Mr. Trump, actually, it might be a good thing that Mr. Trump makes us the 51st state, but that's a whole other discussion. If you believe our economy is going to head into the ditch for a long, prolonged dump, sure, real estate may go into a slump for a while. But you got to believe those things. If you believe interest rates are going to rise rapidly, prices won't go up. But right now, cost of ownership is continuing to improve. Rates are going to go down. One thing we can thank Mr. Trump for is lower interest rates. In the last week, rates have dropped 50 basis points. If things continue on noisy, he doesn't even have to actually implement the tariffs. He just has to make noise about them and the rates are going to get cheaper. Which would be nice if you do that. Because we know what's going on. We know what to watch for. That's actually going to improve the value of your real estate. That's what's interesting. But we live in a great place. And that's why this story will likely continue. And you can pick whatever numbers you want. But even at zero appreciation, all you do is pay off that mortgage. If you've done that yourself in the room, you know what I'm talking about. It's a pretty cool story at the end of the day. We're lucky. Let's ignore the headlines. Turn off your Twitter feed, whatever they call it now. Oh, right. That. I don't have it, so I can't remember what it is. And stick with facts and make some great decisions in real estate for you. And Ed can help you do that. Thanks very much, everybody. Enjoy.
Now, if you like this event and you like to participate in our future events, don't forget to subscribe to our channel and send us a message with your information so we can inform you of our future events. Have a great day.